February 13th, 2025. For those of you who are members, the trade, I mentioned I like to take a particular type of trade in a post yesterday, and the qualifications for that trade would be bar 12 today was one of them, bar 16 was one of them, 57 was one of them, and 63 was one of them. 8 is not one of those trades. If you can't figure out why, just go relook at the post um, or just leave me a message on the post and I'll explain it. But it should be pretty self-explanatory if you just read it all the way through. So that would have gone 3 for 4 today, which is slightly. It's 60%. So if you're picky enough, you can probably get it up to 70. But today it would have been 75%. So obviously a good overall day for that. So I'm just really going to go over the major patterns today. And if you've been watching my videos at all over the past few days, you'll know that I put a big emphasis on trading first legs for second legs. The market, this is a really good day to broadcast the fact that the market, listens to the higher time frames. When you get a move like this on the higher time frame, you shouldn't really be worrying about selling and trying to catch anything that's going on the way down here. So when you get a strong move for the bulls, like we get here, once we start to get the pullback, bar 24 needs a second leg. So it's reasonable to assume the pullback started at bar 24. But once you start to get the pullback, you have to start to think about when is the second leg going to start. And the general rule of thumb I've been saying is when you get a breakout 2 times the length of the breakout is where you get the pullback. So bar 23 to bar 3. So 30, it is, how many bars is that? Sorry. That's roughly 21 bars. So, 42 sideways bars. We got less than that today. It was a little less, but we started to break out around bar 32. Even if you bought the 4-bar micro channel, you did a good job. That was another thing from the members, but just look for the second leg. You get a big leg 1, and this whole time you should be thinking buy. Now it's relatively common to get caught. It's okay to buy something like 31, but you have to be careful when you start to go down. You can buy above 48. You can buy above bar 3 today. Bar 3 today and bar 1 yesterday are both really interesting examples of trades you can take, but you have to be willing to lose them a lot because they're lower probability swing trades. So let's just say, for the sake of it, this whole week, you're someone who likes opening reversals, let's say. And this week has been great to those traders, the traders who love opening reversals. On Monday, you could have bought above 6. That would be fine, but not as clear. On Tuesday, bar 8, you bought above, and, you made 20 points if you held the whole day. Yesterday, you bought above 1, you made 38 points. So you're up almost 60 points. Today, you bought above 3, and you made 50 points. So you're up, 100 plus points this week. You're absolutely doing great this week. But the thing you have to keep in mind is if you're constantly trading these opening reversals, it's not going to be like this all the time, because trades where you just get 10 to 1, they're pretty uncommon. So what you have to be expecting is if you're taking these opening reversals for large swing trades and betting on trend days, is you're usually going to lose. But the thing is, you have to take them all, right? So today, these past 3 days, you're up 100 plus points. But the thing is, the next 3 weeks, I'm just making up a number, but the next 3 weeks might not be as kind to you. You might lose money over the course of the next 3 weeks. You're not going to give back, though, the full 100 points. You might give back, say, 40 of those points, right? You might give back 40 of them, and then you'll get a couple more good swing trades that'll, bring your profit back up over 100 points to like 130 points, and then it'll slowly drop back down. So before it springs up again. So that's the thing about swing trading, especially if you're going to take low probability swing trades on the open, which is a valid strategy if you want to do that. But the thing is, you have to just sit there and take every single one of them. And it can be frustrating because you're taking trades that are, 30-ish%, and maybe, 35%, just depends on your profit target, right? You can be taking trades, let's just call them 30% trades for large swing trades, like buying above 3 and going for a really large profit target, 4 to 1, 5 to 1, probably only going to get it about 30% of the time. So when you're doing something that has a 70% rate of failure, it's pretty common that you're going to lose 5 times in a row. So you have to keep that in mind. If you can't get discouraged if you're taking that type of trade and you lose it 5 times in a row over the course of the next week, because that's what you're signing up for if you're taking that low probability trade. So you do have to keep that in mind. As far as, let's just go a little bit of bar by bar here. So bar 2, a big bear bar, possibly a bear trap, probably buyers around the moving average. Bar 3, an inside bar, a bull bar closing near its high, a reasonable opening swing trade. If you're going to take these trades for large swings, you just enter above, you put a stop below, you close your eyes. Bar 4, a bear bar, but bar 3 is likely going to need a second leg. 5, a bull bar, at least testing the close of 2, and then follow through buying on bar 6. So 5 and 6, we're probably going at least a little bit higher. Large bull bar on 7, but a huge tail on the top, so not as good as it might appear to be buying up here. And then 8, a bear bar with a large tail on the bottom. Retraces about, I don't know, does it hit? No, not quite 75%, but retraces a lot of the bull move. So it could be the start of a trading range. 9, a bull bar, a large tail on the top. We're getting bull bars, but we're getting bull bars and we're going higher, but they're not great bull bars. So probably not going to be a small pullback bull trend all day. 10, a good looking bull bar, good enough that 9 and 10 should get its own second leg, right? So what needs a second leg so far today? You could argue 2 did. 3 definitely needs a second leg. So I'm just going to, this needed a second leg. This needed a second leg. I think by the time you get to 7 needs a second leg, 3 straight bull bars. 9, 10, and 11 going to get a second leg. 13, 14, and 15 should also get a second leg, but it's 3 legs up, right? 1, pullback, 2, pullback, 3. So if you're buying any of these closes, which is fine, you just have to keep in mind you're buying relatively high, so the pullback could be deep. Something to keep in mind when you get 3 legs up, the market will usually fall below the 3rd leg, but it's usually a profitable strategy over the course of time to buy the low of the 3rd leg. So let's say instead of buying up here and putting a stop down here, you put a limit order to buy right here, and you were just going for 1-to-1, right? You want it to get back to the close of 15, so you're risking 13 points, and you put a stop and measure move down. There you go. You would have made money. It's not, the world's greatest trade, but it's something to keep in mind for a framework of while you're trading, knowing that we probably shouldn't get a measured move down of leg 3, because while the market does usually fall below leg 3, it usually also comes back to retest it. So this needed a second leg. We got a reversal down on 24. 24 does need a second leg. And when you're in a bull trend, particularly a small pullback bull trend, and the bears get something that needs a second leg, that's usually an issue. And the bears get 3 straight bars against you. How often do the bears get 3 straight bars against you in a bull trend? It's a little bit less common. So while it is okay to get out below 24, it's kind of difficult to want to sell, because if you look at what you got from selling below 24, that's usually the best you're going to get selling against a decently strong bull trend. So it's probably better to look to either sell the pullback, or better to just wait and focus your energy on looking for a buy in 20, 30 bars, something along those lines. Another thing to keep in mind, a lot of times, this is just something I've noticed. I don't have back testing data on this, but this is just after a couple years of experience, I started to notice this. When you get rallies on the open that last the first 18 to 20 bars and then start to go sideways, usually those get a second leg up. So anything that lasts the first 18 to 20 bars is usually going to get a second leg up. When you get really sharp rallies that last more like 30 bars, so instead of 18 to 20, it lasts 30 bars, that's usually the stuff that goes sideways the rest of the day. And it's just exhaustion, right? If you think about it, it's really just the bulls, they're exhausted here, but they have 30 bars to cool off before they go higher. If you get 30 straight bars in the open, the bulls might need 50 to 60 bars to cool off, and then the day's over. So that's something to keep in mind. When the market moves up too far too fast, it will start to go sideways. 31 likely needed a second leg, a reversal after 3 pushes down. 1, pullback, 2, pullback, 3, and 31. So 31 is probably going to get a second leg. I'm just highlighting everything that I think needs a second leg. Let me know if you guys like this style of video better than the bar by bar stuff. The bar by bar stuff is useful for sure, but I think that it's more useful for chart reading. And I think that the what needs a second leg type of review is probably a little bit better for trading. So just let me know what you guys like better. I'm probably going to keep doing this way regardless, because I like it better. But I would like to know your guys' opinion as well. So we have 4 straight bear bars. That's your 4-bar micro channel. You can sell the close of 45 and go for a measured move of the bodies. 44, sorry, something like that, and you would get filled on 46. So 44 likely needs a second leg down, the sell-off from 41 through 44, and it gets a second leg down on 46. 46 is tricky. It's 3 legs down, 18, 30, and 46. But it's a big enough bar that it's probably going to get another leg down. And that's what 51 is doing. It's going to go, rescue, so to speak, the bears who sold the close of 46. Bears who are selling this close are very patient bears. They're willing to scale in higher, knowing that they're probably going to have a chance to get out, because the math says they will probably have a chance to get out. You can buy above 47. That's going to need a second leg. but you're keeping in mind you have big down, big up, so it might go a little more sideways first. We have a 4-bar micro channel to the upside, so it's okay to just buy the close and go for a second leg. I did buy this close today, 50. Today I bought the close of 12, 14, or sorry, bought the close of 12, bought the close of 16, took a small loss on 16. I bought the close of 50, and I think I took one more trade, and I bought the close of 57. That was it for me today. But anyways, you can buy this close after 4 straight bull bars. You know it's getting a second leg up. And yeah, a lot of the times when you're buying 4-bar micro channels, if you've been trading that way, you're going to notice you're going to sit through a lot of uncomfortable pullbacks. But learning to sit through those uncomfortable pullbacks is kind of the essence of learning how to swing trade. You can buy the close 54. 54 probably needs its own second leg. It could be the second leg up from this, but this is a really good looking bull bar. And then you have consecutive bull bar, uniform size bars, open gap. It's going higher. You can buy any of these closes. This is all going to need a second leg. And look, just look at the difference between this rally. So let's get rid of these. This rally, and then a big bear bar closing near its low, 3 bear bars against you. Here, look at these pullbacks. It's just 1 bear bar, 1 bear bar, 1 bear bar, 1 bear bar. So it's a small pullback bull trend. They're pretty they're less common. I'm not going to say they're unusual, but it's less common to get small pullback bull trends in general, for sure. But the thing to keep in mind is that you really shouldn't be selling. You should only be looking to buy more on pullbacks until bears can get consecutive bear bars closing near their low against you. So, if you're only getting 1 bar against you and then continuing to rally, you can just buy the market for any reason. When you get 3 straight bear bars against you, especially something that's this size, it's larger than average. It's going to need a second leg, especially after 3 bear bars. So this is a good spot to exit. And you can look to re-enter whenever the bulls need a second leg, which again could be argued is 31, and you might have to get out below 41, or maybe you got stopped out. But you can always buy again above 47. All these rallies, you can talk about what needs a second leg through here, but it's just turning into a small pullback bull trend, and your goal is to catch the small pullback bull trend. So as far as the daily chart goes, well, as far as reasonable entries today, I suppose you could buy above 3, you could buy above 5, but swing trades, right? So maybe not great. You could buy above 10. You could probably buy above 31, but you got to be able to manage it. You can buy above 47. You can buy these closes. Traded today, probably 54, 55, or 56 by the close. Small pullback bull trend. The daily chart, consecutive bull bars closing near their highs. Good for the bulls. We're probably going. I'm going to actually turn on my extended hours. I like to use extended hours just for the daily chart because it turns it into more of a continuous chart than anything else. So good bull bar, but you have to keep in mind we are in this tight trading range. So tomorrow we'll be telling. This is a big enough bull bar. It might need its own second leg, but the bulls are really looking for follow through to the new all-time high. They're hoping to get to 6163.75 tomorrow and get consecutive bull bars breaking out to the new high. They're hoping, think about it. What needs a second leg on this chart, right? Let's do that exercise. What about this tight channel? Do you think this is going to get a second leg? Because on a weekly chart, yes, it's probably going to get a second leg up. So, how much higher does it go? I'm not sure. I mean, we did get a tight trading range, but the bulls are looking strong and there's no real reason to sell on the monthly chart. Al posted a video a little while ago about the fact that we could be in for a deep correction at some point this year or late this year, something like that. He posted his video. You can go watch it on his channel if you want. But for me, I just try not to pick the tops. I just assume it's going to go up until we get a really good sell signal on the monthly chart. And the only when was the last time we got a good sell signal bar on the monthly chart? When was the last time we got a bar that might have needed a second leg? You could argue this needed a second leg. Tried to get it, just went higher. This disappointing. So maybe we go higher most of the year. I'm not all that sure. But until we start getting a real reason to sell, I'm just going to be buying. All right, that's going to be it for this review.